Have you ever wondered what could happen if your employer reports your wages incorrectly? Whether it's a simple mistake or a more serious error, incorrect wage reporting can have significant consequences for both employees and employers. In this video, we'll walk you through the potential outcomes, the steps you can take to resolve the issue, and how to protect yourself from future problems. Let's start by understanding what wage reporting is and why it matters so much for your financial well-being and legal standing. Wage reporting is the process where your employer submits information about your earnings to government agencies, such as the IRS and Social Security Administration. This data is used to calculate your taxes, Social Security benefits, and even eligibility for certain government programs. Accurate wage reporting is essential because it ensures that you pay the correct amount of taxes and receive the benefits you're entitled to. If your wages are reported incorrectly, it can lead to a host of complications down the line. Mistakes in wage reporting can happen for a variety of reasons. Sometimes, it's a simple clerical error, like a typo in your Social Security number or a miscalculation of your hours. Other times, it could be a misunderstanding about overtime pay or bonuses. In rare cases, employers might intentionally underreport wages to avoid taxes. No matter the cause, these errors can have real consequences for your tax filings and future benefits. When your wages are reported incorrectly, your tax return may not match the information the IRS receives from your employer. This mismatch can trigger an IRS notice or even an audit. You might end up owing more taxes, missing out on a refund, or facing penalties. It's important to check your W-2 form each year and make sure the numbers match your records before filing your taxes. Social Security benefits are calculated based on your reported earnings over your working life. If your employer reports your wages incorrectly, your future benefits could be reduced. This is especially important for people nearing retirement, as missing or incorrect wage records can lower your monthly benefit amount. Always review your Social Security statement to ensure your earnings are accurately recorded. Eligibility for certain government programs, like unemployment benefits or Medicaid, often depends on your reported income. If your employer reports your wages incorrectly, you might be denied benefits you're entitled to, or, conversely, receive benefits you shouldn't. Either situation can lead to headaches and even legal trouble. That's why it's crucial to ensure your wage information is correct. The best way to catch wage reporting errors is to regularly review your pay stubs, W-2 forms, and Social Security statements. Look for discrepancies in your reported earnings, Social Security number, or employer information. If something doesn't look right, don't ignore it. Addressing errors early can save you a lot of trouble down the road. If you notice a mistake in your wage reporting, the first step is to contact your employer's payroll or HR department. Explain the error and provide any documentation you have, such as pay stubs or timesheets. Most employers will work with you to correct the mistake and issue a corrected W-2 form if necessary. Acting quickly can help prevent further complications. Sometimes, employers may be slow to respond or refuse to correct wage reporting errors. If this happens, you have the right to escalate the issue. You can contact the IRS, the Department of Labor, or your state labor agency for assistance. These agencies can investigate the matter and help ensure your wages are reported accurately. If your employer issues a corrected W-2 after you've already filed your taxes, you may need to file an amended tax return. This process involves submitting a Form 1040X to the IRS, along with the corrected wage information. While it can be a hassle, it's important to ensure your tax records are accurate to avoid future problems. If you find that your Social Security earnings record is incorrect, you can request a correction directly from the Social Security Administration. You'll need to provide documentation, such as W-2 forms or pay stubs, to support your claim. The SSA will review your case and update your records if the error is confirmed. Keeping your Social Security record accurate is vital for your future benefits. Employees are protected by various laws that require employers to report wages accurately. The Fair Labor Standards Act and other regulations ensure that workers are paid fairly and that wage information is reported correctly. If your employer fails to comply, you have the right to seek legal recourse. Understanding your rights can empower you to take action if needed. Employers who fail to report wages accurately can face serious penalties, including fines and legal action. The IRS and Department of Labor can impose sanctions for intentional misreporting or repeated errors. These penalties are designed to encourage employers to maintain accurate records and treat employees fairly. Lenders often verify your income using wage reports when you apply for a loan or mortgage. If your reported wages are incorrect, you might be denied a loan or offered less favorable terms. It's important to ensure your wage information is accurate before applying for credit, as errors can impact your financial opportunities. For individuals on work visas or seeking permanent residency, accurate wage reporting is critical. Immigration authorities may review your wage records as part of your application. Errors can delay or jeopardize your immigration status, so it's essential to address any discrepancies as soon as possible. Employers typically report wages to the IRS and Social Security Administration using forms like the W-2. These forms detail your total earnings, taxes withheld, and other important information. Employers are required to provide you with a copy of your W-2 each year, usually by the end of January. Reviewing this form is your first line of defense against wage reporting errors. Your W-2 form contains several boxes with information about your wages, taxes withheld, and other benefits. It's important to understand what each box means so you can spot errors quickly. If you're unsure about any part of your W-2, ask your employer or a tax professional for clarification. Payroll departments are responsible for calculating your earnings, withholding taxes, and reporting wages to government agencies. They use specialized software to minimize errors, but mistakes can still happen. Building a good relationship with your payroll team can make it easier to resolve issues if they arise. If you discover a wage discrepancy, it's important to gather all relevant documentation. This includes pay stubs, timesheets, emails, and any correspondence with your employer. Keeping detailed records will help you make your case if you need to escalate the issue to a government agency or take legal action. Correcting wage reporting errors can take time, depending on the complexity of the issue and the responsiveness of your employer. Simple mistakes may be fixed within a few days, while more complicated cases can take weeks or even months. Patience and persistence are key when navigating this process. To reduce the risk of wage reporting errors in the future, regularly review your pay stubs and W-2 forms. Set reminders to check your Social Security statement each year. If you change jobs or receive a promotion, double-check that your new wage is reported correctly. Staying proactive can help you catch mistakes before they become bigger problems. Maintaining accurate personal records is one of the best ways to protect yourself from wage reporting errors. Keep copies of your pay stubs, W-2 forms, and any correspondence related to your employment. These documents can serve as evidence if you ever need to dispute a wage error. Wage reporting errors can have a long-term impact on your retirement planning. If your earnings are underreported, your Social Security benefits and pension contributions may be lower than expected. This can affect your financial security in retirement, so it's important to address errors as soon as possible. Some health insurance plans are based on your reported income. If your wages are reported incorrectly, you might pay too much or too little for coverage, or even lose eligibility. Always check that your reported income matches your actual earnings when applying for or renewing health insurance. Child support payments are often calculated based on reported income. If your wages are underreported, you may end up paying less than required, which can lead to legal trouble. Overreported wages can result in higher payments than necessary. Ensuring accurate wage reporting is crucial for fair child support arrangement. Eligibility for student financial aid is often based on your family's reported income. Incorrect wage reporting can affect your ability to qualify for grants, loans, or scholarships. If you notice an error, contact your school's financial aid office and provide documentation to correct your records. Unemployment benefits are calculated based on your reported earnings. If your wages are underreported, you may receive less than you're entitled to. Overreported wages could disqualify you from benefits altogether. Double-check your wage information when applying for unemployment to ensure you receive the correct amount. Disability benefits, like Social Security disability insurance, are also based on your reported earnings. Errors can lead to reduced benefits or even denial of your claim. If you're applying for disability, make sure your wage records are accurate and up to date. Tax credits, such as the Earned Income Tax Credit, depend on your reported income. Incorrect wage reporting can cause you to miss out on valuable credits or face penalties for claiming credits you're not eligible for. Always verify your reported income before filing your tax return. If you're filing for bankruptcy, the court will review your reported income to determine your eligibility and repayment plan. Wage reporting errors can complicate the process and potentially delay your case. Make sure your wage records are accurate and provide any corrections to the court as soon as possible. During divorce proceedings, reported income is used to determine alimony and asset division. Wage errors can lead to unfair settlements or legal disputes. If you're going through a divorce, review your wage records carefully and correct any mistakes before finalizing your agreement. Some credit bureaus may use wage information to assess your creditworthiness. Incorrect wage reporting can lower your credit score or affect your ability to get loans. If you notice an error, dispute it with both your employer and the credit bureau to protect your financial reputation. Significant discrepancies between your reported wages and your employer's records can trigger a tax audit. Audits can be stressful and time-consuming, so it's best to avoid them by ensuring your wage information is accurate and matches your employer's reports. Many employers verify your previous wages when you apply for a new job. Incorrect wage reporting can affect your job, prospects, or salary negotiations. Always check your wage records before applying for a new position to ensure there are no surprises during the verification process. Some insurance claims, such as workers' compensation or disability, rely on your reported wages. Errors can result in denied or reduced claims. Make sure your wage records are accurate when filing any insurance-related paperwork to avoid unnecessary complications. Government agencies may audit employers to ensure wage reporting compliance. If errors are found, both the employer and employee may be contacted for clarification. Respond promptly to any audit inquiries and provide accurate documentation to resolve the issue quickly. If your reported wages don't match your employer's records, your tax refund may be delayed while the IRS investigates the discrepancy. To avoid delays, double-check your W-2 and tax return before filing. Promptly correct any errors to keep your refund on track. If your employer overreports your wages, you may be overpaid or receive benefits you're not entitled to. Employers or government agencies may later seek to recover these overpayments, which can be stressful and financially disruptive. Address wage errors quickly to avoid repayment demands. Underreported wages can lead to underpayment, meaning you receive less than you're owed. This can affect your ability to pay bills and meet financial obligations. If you suspect underpayment, gather your records and address the issue with your employer as soon as possible. Incorrect wage reporting can lead to the wrong amount of taxes being withheld from your paycheck. This can result in a large tax bill or a smaller refund at tax time. Review your pay stubs regularly to ensure the correct amount is being withheld based on your actual earnings. Overtime pay is often a source of wage reporting errors. If your overtime hours aren't reported correctly, you may not receive the extra pay you're entitled to. Keep track of your hours and compare them to your pay stubs to ensure you're being paid fairly. Bonuses and commissions can also be misreported. If these earnings aren't included in your wage report, you may miss out on benefits or face tax issues. Always verify that all forms of compensation are accurately reported on your W-2 and pay stubs. If you work for multiple employers, it's important to ensure each one reports your wages correctly. Errors from one employer can affect your overall tax situation and eligibility for benefits. Keep separate records for each job and review all wage reports carefully. Self-employed individuals are responsible for reporting their own income. Errors in self-reported wages can lead to tax problems and affect eligibility for benefits. Keep detailed records of your earnings and expenses, and consult a tax professional if you're unsure about reporting requirements. In summary, wage reporting errors can have far-reaching consequences for your taxes, benefits, and financial well-being. The best way to protect yourself is to stay informed, review your records regularly, and address any discrepancies as soon as they arise. By being proactive and organized, you can minimize the impact of wage reporting errors and ensure your financial future remains secure.